1. The countdown has begun. Every retirement investor is asking, when is the XRP ETF coming? That one question is triggering a silent race behind the scenes, and the clock is ticking faster than anyone expected. The truth? Once the XRP ETF becomes reality, everything changes overnight. This won't be a slow grind like past crypto runs. Institutional capital doesn't trickle in, it floods. And when it does, it will chase a fixed supply of XRP in the open market. Billions from retirement accounts, pension funds, and wealth managers will flow in, all under the SEC's green light. That moment flips the narrative. XRP isn't just a speculative asset anymore. It becomes a regulated, institutionally approved store of value. And that changes how your IRA or Roth IRA needs to be positioned. The real question isn't when the ETF launches, it's where your XRP retirement account stands when it does. Will you be caught scrambling at $5, $10, or $50 XRP? Or will you be strategically placed ahead of the wave when prices are still within reach? Because here's the hard truth. Retirement wealth is about timing, not just saving. The countdown has begun. Those who act now don't just prepare, they capitalize. 2. Why ETFs shift everything. We've seen this playbook before, and the Bitcoin ETF was the dress rehearsal. The moment it launched, BlackRock, Fidelity, and Wall Street giants poured in with billions. Not gradually, not cautiously. They moved fast, because they understood something many retail investors don't. Once an ETF is approved, the easy gains are already gone. That brings us to the question every retirement-minded investor must ask right now. Should I buy XRP before the ETF? Because here's the reality. You're either early or you're expensive. There's no middle ground once institutional demand turns on. ETFs don't just add exposure. They legitimize an asset. They unlock trillions in retirement accounts, giving advisors and 401k managers the green light to allocate to XRP. That's not hype. That's structure. Legal, regulatory, and unstoppable once it starts. And for your crypto IRA or Roth IRA, that moment shifts everything. You're no longer a contrarian. You're now one of millions trying to buy a scarce asset with a fixed supply. This isn't about catching a pump. It's about positioning your XRP retirement account before the rush. Because after the ETF hits, you're not early anymore. You're just another buyer in a crowded market hoping someone sells. But today you still have the choice, to lead or to chase. 3. Direct ownership versus Wall Street products. Here's the uncomfortable truth. Wall Street doesn't innovate, it repackages. And when it comes to XRP, that's exactly what an ETF does. It wraps the asset in fees, bureaucracy, and layers of middlemen. You get exposure, yes, but not control, not access, not flexibility, and definitely not the full upside. When you choose direct ownership of crypto IRA XRP today, you're not just buying a coin, you're securing freedom inside your retirement strategy. You control the timing, you control the custody, you choose when to buy, sell, or hold, without waiting for a fund manager's quarterly decision. And the tax advantages? Massive. With a self-directed Roth IRA or crypto IRA, your XRP gains can be completely tax-free or tax-deferred, depending on your setup. That's something no ETF can offer, no matter how shiny the marketing. ETFs are built for institutions. For retail retirement investors like you, direct ownership is how you stay ahead. Because let's face it, once Wall Street gets the green light, they'll repackage XRP into bite-sized, fee-loaded, compliance-heavy products and sell it back to you at a premium. But today, you still have the chance to buy it clean, simple, and 100% under your control. Don't wait for permission to invest in your future. Own your XRP retirement account before they do. 4. Legal clarity already here. For years, uncertainty kept many retirement investors on the sidelines. But that changed, decisively, in 2023. A federal court officially ruled that XRP is not a security when traded on public exchanges. That legal breakthrough didn't just clear Ripple's name, it opened the floodgates for retirement adoption. So when people ask, "Can I hold XRP in a Roth IRA?" the answer is no longer complicated. It's yes, loud and clear. Clarity is no longer a hope. It's a reality. And in the world of retirement investing, clarity is everything. Because once the legal fog lifts, what follows is infrastructure. And right now, custodians are in place. Crypto IRA providers are active self-directed IRA platforms already allow XRP. The on-ramps are here, the gate is open, and those who understand the opportunity are already securing their positions. Before the ETF boom, before the media hype, before Wall Street catches up. This is no longer about waiting. It's about executing while the field is still wide open. If you believe XRP has a place in the future of finance, then it absolutely has a place in your XRP retirement account today. Fully legal, fully compliant, and fully under your control. 5. The 5% rule. In retirement. Let's get one thing clear. You don't need to gamble to win big in the new financial era. In retirement planning, it's not about going all in. It's about smart exposure. And that's where the 5% rule comes in. Allocating just 5% of your IRA or Roth IRA portfolio to XRP can dramatically enhance your long-term performance without jeopardizing your stability. Why? Because XRP represents asymmetric upside, meaning a small position has the potential to deliver massive impact if the asset performs. Let's break it down. 95% of your retirement portfolio remains diversified. 5% taps into the growth engine of crypto IRA, XRP. If XRP underperforms, the damage is minimal. If XRP takes off post-ETF, your gains are disproportionate. This isn't a bet. It's a hedge against stagnation, inflation, and the limitations of traditional assets. The beauty of the XRP Roth IRA structure is that any gains can be entirely tax-free. That means if your small 5% grows 10x, 20x, or more, the profits are yours to keep. Retirement investing isn't about timing the top or chasing moonshots. It's about positioning. A small, well-timed move can do more than years of grinding in bonds or ETFs. Balance, not risk, is the new power move. And in today's market, 5% in XRP may be the smartest allocation you'll ever make. 6. Step by step, adding XRP to IRA. A question we hear again and again. How do I add XRP to my IRA account? The answer? It's easier than ever. And the barriers that once stopped retirement investors no longer exist. Today, there are trusted platforms like iTrust Capital, IRA, and others that specialize in IRS-compliant crypto IRA structures. These companies exist to make your transition into XRP retirement accounts smooth, fast, and secure. Here's how the process works. Choose a crypto IRA provider. iTrust Capital, IRA, or similar trusted names with transparent fees and full compliance. Open a self-directed IRA or Roth IRA account. This gives you the flexibility to hold alternative assets like XRP within your retirement plan. Fund the account. Transfer or roll over funds from an existing IRA, Roth IRA, or 401k. No taxable event triggered. Buy XRP directly within the platform. Once funded, you can purchase XRP and other crypto assets inside your retirement account. Store it securely. Most platforms offer institutional-grade custody with insurance and multi-signature security. Start to finish, you can launch your XRP retirement account in less than an hour. No complex paperwork, no legal guesswork. Everything is handled through platforms built for compliance. The best part? You retain full tax advantages of traditional retirement accounts, but now with the upside potential of XRP inside. Don't let complexity stop you. In 2025, access is no longer the problem. Execution is. 7. Why timing matters. In retirement investing, one truth separates winners from watchers. Timing is everything. By the time the XRP ETF goes live, the market may already have repriced XRP dramatically. Why? Because markets are forward-looking. By the time institutions get formal access, they've already positioned themselves quietly. The media headlines come last, not first. So if you're asking, is XRP a good retirement investment? The answer is yes, but only if you act before the institutions do. Let's be clear, ETFs don't wait for you. Institutional money doesn't announce its move. Price moves don't happen after the news. They happen in anticipation. Just look at what happened to Bitcoin. The ETF was approved, but the real gains came in the weeks before, when smart money rotated in early. And now? The same pattern is forming for XRP, except this time, it's accessible inside your Roth IRA or crypto IRA XRP account before the big shift begins. Waiting might feel safe, but in retirement planning, waiting is often the most expensive decision of all. Today, you still have early access. Tomorrow, you might be chasing momentum, paying double or more for the same asset. So ask again, is XRP right for your retirement? Only if you're ready now, not later. 8. Diversification against fragility. Your retirement future depends on one thing most people ignore: resilience. And right now, the old models? They're cracking. Stocks swing wildly, driven by algorithms, politics, and fear. Bonds no longer offer true protection, with yields barely outpacing inflation. Fiat currency quietly bleeds value, eroded by debt and printing. So where do you turn? You don't abandon traditional assets, you fortify them. Adding XRP to your IRA or Roth IRA isn't about betting against the system. It's about preparing for when that system falters. XRP in IRA. Roth IRA retirement strategies offer what legacy models can't. Borderless liquidity, scarce digital supply, decentralized security, real-time use case adoption. This is diversification done right. Not chasing hype, but building defense. XRP doesn't replace your retirement portfolio. It reinforces it. Because when the next crisis hits, and it always does, you won't be scrambling. You'll already have an allocation that moves outside the fragile rules of legacy finance. Retirement isn't just about growth. It's about stability under pressure. And in this new era, XRP may be the only asset built for both. 9. The FOMO trap. It's coming. The headlines, the hype, the madness. XRP ETF approved. Billions flow into XRP funds. Crypto surges as Wall Street backs XRP. And when they hit, it will be too late. Millions will scramble to open accounts, buy at inflated prices, and chase what they should have positioned for weeks, even months, earlier. That's the FOMO trap, acting after everyone else already moved. It's emotional, reactive, expensive. But retirement isn't about reaction. It's about foresight, strategy, quiet moves before the noise. The true winners? They're not on Reddit threads or CNBC sound bites. They're the ones who already added XRP to their IRA and Roth IRA accounts while it was still early, quiet, and undervalued. XRP and IRA. Roth IRA retirement isn't a trend. It's a positioning play. It's how you sidestep the FOMO trap and enter before the flood, not during it. Because once the gate opens and capital floods in, the rules change. And those who waited? They'll be stuck buying high and hoping, the most dangerous position in retirement planning. You still have time, but not much. Make your move before the headlines do it for you. 10. Act before it's too late. This isn't a headline game. It's not about hype. It's about a once-in-a-generation opportunity to secure your retirement before the system shifts permanently. The XRP ETF countdown isn't just news. It's a signal that the rules are changing, and Wall Street is coming. Once that gate opens, prices won't rise gradually. They'll launch. Access will shrink. The early advantage will be gone. But right now, you're still early. Right now, you still have time to open a crypto IRA, allocate just 5% to XRP, and protect your legacy, not gamble with it. Because retirement isn't just a finish line, it's a strategy, and timing is your biggest weapon. Hesitation is the most expensive mistake you can make, not because XRP won't perform, but because you'll be too late to benefit. So ask yourself, will I be the one who watched XRP transform the financial system? Or the one who was already positioned inside it when it happened? Don't wait for headlines. Don't follow the crowd. Lead your future. Move today. Add XRP to your IRA or Roth IRA now, before the wave leaves you behind.